Coming up on Market to Market, immediate Chinese buying fails to materialize. The race to complete levee repairs before flood season kicks into high gear, helping landowners return some of their ground to native prairie. And commodity market analysis with Sean Hackett next.
Suggested that,
Pioneer Hybrid International is a proud sponsor of Market to Market.
Sukkot Manufacturing Company, providing equipment and buildings to store and condition grain to help farmers adjust to market swings. We build drying, moving, and storage equipment designed to preserve the quality of their crops. Sukkot Manufacturing, store now, profit later.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today. This is the Friday, February 21 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Paul Yeager. The next steps of the ceasefire for the 18-month-old trade war with China were taken this week. The world's #2 economy reduced tariffs on nearly 700 U.S. products, including soybeans, pork, corn, and wheat. The reaction in farm country remains cautiously optimistic. The Phase 1 trade deal between the United States and China was signed in January, and official implementation is underway. U.S. traders hoping for Chinese buyers to purchase large amounts of U.S. commodities have yet to see their hopes come to fruition.
I'm not going to anticipate we're going to see huge amounts of soybean sales to China beyond just what normal sales would be until we get into next fall. Because there was a caveat in the agreement that we had to be price competitive. Well, South America has a record crop that they're starting to harvest right now. It'll probably be difficult for us to be consistently price competitive over the next 6 or so months.
The South American crop is moving through the system and, for now, remains the cheaper alternative to U.S. soybeans. Commodity groups are continuing to look for new markets that may initially import only 1 or 2 million bushels of product.
We as a soybean industry continue to work to diversify our markets beyond China. Unfortunately, China buys 60% of the world's soybeans, so they're still the biggest market and always will be for quite a while in the future here. But we're working in other markets to develop those demand picture for soybean producers.
President Trump signed an order this week giving California farmers and ranchers greater access to water resources. The move spawned a lawsuit by the state of California. The action comes as reduced snowpack in the Sierra Nevadas indicates a western drought is looming. Farther away from the California sun, rain, snow, and high water swept from the Midwest to the eastern seaboard. Peter Tubbs kicks off our weather coverage.
The flood season of 2020 started early in the South. Heavy rain in Tennessee turned fields into lakes. Transportation officials closed roads as water moved up in the flood-ravaged region. The heaviest rain extended from Louisiana through Mississippi to Georgia. Residents around Mississippi's capital of Jackson were sent from their homes and told not to return until given the all clear. This neighborhood is near the Pearl River, and a reservoir held and allowed for a slower release of upstream water coming towards Jackson. Some residents had to paddle into their homes to check on belongings and conduct property checks. Winter spread to the southeast this week as snow fell in North Carolina and Virginia, areas that rarely see conditions like this. Here in Raleigh, the capital is forecast for only an inch, but other locations in the northeastern portion of the state could be in line for 6 inches and whiteout conditions. From Market to Market, I'm Peter Tubbs.
And I'm John Torpy in Hamburg, Iowa. Some refer to spring as the season of renewal. For those living along the Missouri River, the only thing being renewed is fear of another year of flooding. In 2019, the southwest Iowa city of Hamburg was inundated by floodwaters on 3 separate occasions. The Missouri River destroyed countless homes and left farm fields in ruins. Damage to buildings and property was well over the $1 billion mark. While there are predictions of flooding in states bordering the Missouri River this year, officials with the National Weather Service say it won't be as bad as last year.
Everything just looks like at least minor flooding is a virtual certainty for parts of the Missouri River.
As planting season approaches, farmers living near Hamburg have the additional worry of broken levee repair. Crop insurance agreements hinge upon the completion of these projects that protect flood-prone communities and farm fields. Construction crews must complete their work by April 11th, or producers could see their flood insurance rates triple.
There's just a lot of unknowns, which makes it really hard for us, the farmer, and everybody else to figure out, where do we go? Do we go 75% level? Do we bump it up? The price is already going up. Can we afford to bump it up? There's just a lot of scenarios that we don't know, and we've got to make that decision by March 15th.
Previous predictions of spring flooding are already coming to pass in the Cornhusker State. Residents of Fremont, Nebraska, are enduring rising floodwaters due to an ice jam that formed just south of town where U.S. Highway 77 crosses the Platte River. As the ice melts, towns downstream could see the river climb out of its banks. The water will eventually join snowmelt from the Dakotas, that National Weather Service officials are saying will bring rising floodwaters to Iowa, Missouri, and Nebraska in the coming months. For Market to Market, I'm John Torpy.
At one time, most of the Midwest was prairie. Now, the millions of acres that are tiled help feed a hungry planet of nearly 8 billion. But there is a movement to put some of the land back into native grasses and plants. Peter Tubbs has more in our cover story.
Workers slowly harvest ripe seeds on a September morning. The rows of anise hyssop are part of the 365 acres of plants and grasses at Prairie Moon Nursery near Winona, Minnesota. Surrounded by corn, soybean, and dairy operations, Prairie Moon is notable for managing a diverse harvest.
Well, we have a lot more crops. Lots and lots more crops. We handle about 750 different species, not all grown here, but a vast majority of them are.
The 750 varieties are plants that covered the prairies of the upper Midwest for millennia before the plow broke the sod in the 19th century. As landowners have considered non-agricultural uses for farmland over the last 50 years, returning areas to the original plant base has gained popularity. Prairie Moon has found a business niche supplying seeds for restoration projects, both public and private. While raising seed is an agricultural process, the details are different compared to neighboring farms.
And many of our plots we'll harvest multiple times. You know, we'll get the earliest crop off of it, we'll come back, hand collect another. You can get a lot of seed faster by growing as a monocrop. You just can't do that with every species.
Prairie Moon grows most of its own inventory, focusing on species that are rare or difficult to grow. Common varieties that are simpler to grow and harvest are purchased from growers in the upper Midwest and New England to maximize the diversity within each cultivar. While seeding native plants benefits the soil and reduces erosion, these species also feed the insects that pollinate agricultural crops and other plants.
They produce that habitat that a lot of our species need. And they also have benefits to soil and water quality, especially as it relates to soil erosion and water pollution and runoff.
Harvest stretches from late May to early November. The winter months are spent cleaning, packaging, and shipping orders. Some varieties are grown out and shipped as live plants, but the majority of the offerings in the company's catalog are seeds. Most of the varieties offered for sale are grown in plots, which allows for easier weeding and harvest. But some of the plants only grow in a naturalized stand, as they would in a native prairie environment. Prairie Moon advises landowners looking to install native plants on their property. The goals of the landowner and the conditions on the ground shapes the kind of varieties that are planted.
Every piece of land has a historical context in terms of habitat. But I think what more and more people are realizing is that we have our own unique habitats here in North America, like the prairie, that 99% of that habitat has been plowed under or paved over since the 1830s. And so there is real work that we can do right here at home.
Prairie projects run the gamut, from ornamentals in the yard of a homeowner to a preservation site surrounded by fully mechanized farm fields.
First, you want to have a conversation about the homeowner's goals. What exactly is it that you want to achieve? Are you hoping to get a government contract cost share through the NRCS or the FSA? That's going to be a certain type of project. Are you an urban landowner who just wants to attract birds so that you can do some bird watching from the kitchen window? Well, that's going to be another type of project that we can help with.
Some prairie reconstructions look to return a farm field to the plants it may have hosted before agricultural cultivation. The state of Iowa has planted hundreds of miles of highway right-of-way in native plants to both provide habitat for pollinators and birds, as well as reducing mowing costs each summer. Iowa is the only state with this kind of program. A hillside that drains into a creek in Whiteside County, Illinois, was converted to native prairie 20 years ago. Part of the project's seed stock were produced by Prairie Moon. Since the restoration, the erodible farm ground has stabilized, and the creek now runs clear. The improvement in water quality may be long-term due to the work of the Hardin family, which owns the land. This corner of the farm is rented ground, but has been placed under an easement that limits the types and techniques of agriculture the renter can utilize, and requires the areas of prairie and trees remain undisturbed.
And it's sort of unique that it's one of the few agricultural easements where it's for perpetual either agricultural use or preservation use.
The prairie and hardwood plantings run for nearly a mile along Otter Creek, which drains into the Mississippi River 8 miles downstream. The mix of grasses and plants provides food and shelter for a variety of birds and wildlife and filters the water that flows off the strip. The Hardin family enjoys continuing the conservation work their grandfather began in the 1950s with the first terraces in the region. The original prairie planting was done by their late grandmother in 1998 and has matured over the last 20 years.
Just going there and walking it, it just has a whole different feel than the rest of the farm. It's just quieter there and something's more serene about it when you walk it. We've started now with a couple of people in the area, and maybe it'll catch on.
For Market to Market, I'm Peter Tubbs.
Next, the Market to Market report.
The commodity markets chopped around, waiting for news from the Outlook Forum, and then a Friday morning tweet from the president was added into the mix. For the week, May wheat bumped up 11 cents and the nearby corn contract lost a penny. The May soybean contract fell 4 cents as Chinese buying failed to materialize and South American prices continued to be more attractive. May meal dropped $1.80 per ton. May cotton rose 59 cents per hundredweight. Over in the dairy parlor, March Class 3 milk futures lost 38 cents. The livestock sector finished mixed. April cattle shed $2.08. April feeders added 72 cents. And the April lean hog contract put on $2.73. In the currency markets, the U.S. dollar index rose 19 ticks. April crude gained $1.12 per barrel. COMEX gold skyrocketed $59.80 per ounce. And the Goldman Sachs Commodity Index added more than 3 points to finish at 420. Joining us now to offer insight on these and other trends is one of our regular market analysts, Sean Hackett. Sean, welcome back.
It's always great to be here, Paul. Real good.
So we have this tweet, and it comes less than 24 hours after the Secretary of Ag said there won't be another round of MFP. Then the president says this. The markets initially bounced higher, and then they turned red on Friday. What are we supposed to take from these two conflicting stories moving forward?
It's been the continued trend of the Trump administration where one hand's not talking to the other hand, and it seems that the president gets very impulsive with what he wants versus what supposedly his secretaries are doing, and so it just creates massive confusion, and markets just don't know what to do. And you said choppy markets, chopping around up and down. What are you supposed to make of a president that says one thing and a Secretary of Ag who's supposed to know exactly what's going on saying something else? It just puts uncertainty at a time when we have plenty of uncertainty to be dealing with.
Wheat was hit particularly hard on Friday, but this market has been looking as Chinese interest comes in, but the 90-day weather forecast is cool and wet. What's playing into this market?
Well, the wheat market had a big rally because Russia had 2 bad crops in a row. Their exports are way down. Export prices started to take off. But then all of a sudden, we had this capital flight coming into the U.S. dollar. And because wheat is such a global market, when that dollar starts to take off, we start to become very quickly uncompetitive. And if you look at the dollar rise just in the last week, week and a half, the wheat market has fallen pretty precipitously in direct reverse correlation to that. So we really think this is a very highly correlated currency move than anything else.
We'll get into currency in a moment, but the dollar almost up 2 3/4 year highs. So you're saying that's weighing some of the hardest on wheat?
It is, because when you're dealing with corn or soybeans, it's us and South America, and it's not as broad. But with wheat, we have Australia, we have Russia, we have the Ukraine, we have the U.S. It's such a broad, base of production that the dollar has a disproportionate effect on U.S. wheat prices when the dollar gets going.
We're making 11-cent gain on the week. Are you making sales yet?
On soft red winter wheat, we want to be making some sales. We really do. Our smart money algorithm that we measures capital flows is heavily bearish, and we're starting to move up into that upper end of the trading range that has been pretty hard to get through, and we don't think it will get through this time.
Corn has been a major story coming out of the forum. Again, more acres. We're looking at 94 million acres, and we keep looking at this. There is too much corn. Is there?
Well, our corn stocks are way down from last year. We did have a small crop last year, but if we do plant 94 or 95 million acres of corn and we have the demand base that we do, the USDA is projecting 2.5 billion, maybe 3 billion bushels of corn. That's a really tough number to get through, and so we need something to change that up. Either acres don't get planted like last year, or some kind of weather comes into South America or the U.S., but right now, so long as that's the forecast, corn's going to struggle here.
All right, so do you sell now before it goes lower?
I think you have to get some on the books now, Paul. Our forecast is a little bit different than the one you mentioned earlier. We actually see an early start to the planting season this year, early spring, some really dry conditions in the middle of the spring. What it means is record early planting, record planting pace, and we know what that means. It could mean even more corn acres than the 94 or 95 million. And so we're really worried that the corn market could kind of nosedive like it did last year, but for an entirely different reason. So we will get some on the books here.
All right, so a lot of acres going to corn. Is it coming from soybeans? I'll get your take on that in a moment. But the other thing that's playing in the soybean market right now, Sean, is this story with the Brazilian real. And we got our first question that we're going to use. This one came via Twitter. Bradley in Upland, Nebraska. He's asking, how much cheaper can the Brazil real get?
We are at all-time record lows. So the answer is we have really no idea how far it could go because there's no other point on the chart that says it'll go here.
And so what does that mean then for soybeans for us here in the U.S.?
It just means we are going to continue to struggle. We talked about the price difference, South America being more competitive than U.S. price. The worse the real weakens, the more it makes that, price differential more difficult to compete with.
All right, are we making sales short-term, long-term here?
We're pretty constructive on grains beyond the next couple of months, so we don't think this is a time to sell it all and be done with it for the year. We want to get some on the books, get some done. I don't think anyone wants to endure what we think is going to be a pretty tough spring, but we think there's light at the end of the tunnel as we get beyond that, and we want to save some powder dry for some late spring, early summer sales.
Save an opportunity if there is some type of blip, whether it's a weather problem here. Is that what you're saying?
We think it's going to be a weather problem here. We think it's going to be more of a drought-like conditions in the mid-late spring that's going to make early planted grains compromised and have the market who'd be trading early planting makes grain say, wait a minute, now all these early planted acres are not going to maybe be as good as we thought. We have to recalibrate. And so we think we're going to get a similar V kind of a pattern when we come out of that, and that gives us our opportunity to get a weather rally going like last year and get a chance to sell.
All right. Acreage battle, cotton's always figured into that. Yeah. Cotton up this week, but it's wet in the South right now.
Yeah, the South is very, very wet. Already the USDA has dialed down, cotton acres. So if the weather remains, that wet and that unfavorable, the cotton acres are going to be tough to bring in. However, just because of what we just said with the grain markets, corn probably getting hit, soybeans coming down, we think that cotton could look a little better a month from now than it looks today. Obviously, it's always a moving target, but we're not so sure that we're not going to put some acres in, especially in the state of Texas, where we think the weather won't be quite as daunting as it is in the Deep South.
They're growing cattle in Texas as well. We know today the cattle on feed report came out of placement was 99% of what was expected. That's below the estimate there, but we also had another number at 102.1.
Yeah, I mean, the cattle on feed was pretty close to what everyone was looking for. The placement was certainly off. When you look at the whole report, I don't think it's going to take the cattle market away from what it's really focused on right now, which is the coronavirus and demand issues, especially from Japan. We've seen some pictures that Japan, some cities, some areas that are supposed to be bustling are really, really quiet because people are worried and just being, staying inside, even though it does, the virus isn't proliferating there as it did in China. But the cattle market's worried about that because without Japanese demand, that's a big hit.
Well, then there was a story this week that said maybe the Chinese are starting to kick the tires on beef, U.S. beef, or pork. Which one's going to win out here?
Well, we think pork will win out. We think that in the end of the day, they have always eaten pork. That is their lifeline. That is their cultural meat to eat. And when we look at pork prices in China making new record highs this week because of the supply shortages getting worse, because nobody can feed any animals, nobody can get product anywhere, we have to believe they're going to find a way at least to get U.S. pork into their country.
But there was a story this week that the sow herd monthly increased again for the 4th consecutive month. So there is some rebuilding.
Well, and remember, we supposedly got a story that an African swine fever vaccine has been found. It has to be a little more verified. We have to get a little more ducks in a row, but it does appear it could be available near the end of the year. And I would imagine some Chinese producers are, starting to get a little more confident that they can get some investment going, get some herd growth going, because they're going to have a vaccine that's going to save the day for them.
So is that the reason to make a sale in hogs right now?
We don't think it's the right time to make sale in hogs right now. We think that there's more upside to go. We don't feel there's going to be a supply response until 2021. We think this year it's still going to be a big shortage, and the U.S. is going, if the trade deal has any value whatsoever, the U.S. is going to have their day to get a price move here. So we would be patient on hogs. We wouldn't jump the gun just quite yet.
And I did kind of skip over feeders, and that number that I gave you, 102.1, was on feed. So we are still seeing more animals go into the lot.
We are, and beef production in the second quarter is going to be up significantly, beef production in the U.S. from the first quarter. But the other thing we do want to kind of let everybody know that the drought has broken in Australia. Flooding rains there, and their cattle price has gone parabolic. And so the imports that we usually bring in from Australian beef in the second quarter, we feel is going to completely dry up. So that's going to help counterbalance some of this extra supply. So it's a mixed bag, but we don't think it's doom and gloom at this point.
Well, the Australian story, though, there was some improvement after the wildfires. They all of a sudden had a whole lot of rain, but then that also impacts the wheat market.
Yes.
And so, but you're saying the beef market is going to be a little more impacted there.
Absolutely. I mean, people don't realize how much Australian beef we import into this country. And without that beef coming in, it's going to really tighten up the lower end of the market, which, on the margin is going to be pretty positive as we move into grilling season. If we're correct that the spring season is going to start early, that means we're going to get some extra demand this year that we didn't get last year when it was cold and wet all the way into late June.
So the early spring that you're referring to, that means I'm going to be grilling sooner.
Absolutely.
And have an opportunity to eat through some of that supply.
Yeah, and that's positive. I mean, on the margin, that will really help sop up some of the supply that's out there.
So we have these mergers going on in the dairy industry. Dean Foods going to be purchased by Dairy Farmers of America. Usually those don't have a major impact on the market.
They really haven't, Paul. I've never really noticed them to have huge impacts. I mean, it's a great big story, but not really to the markets.
So what is moving dairy down again here this week?
Well, I mean, the coronavirus and the lost demand from China is a huge deal, especially for the milk powder. The other thing is that we're moving into a better production part of the season. The spring flush, they call it, the seasonal strong production for the U.S. Our production, we just got production numbers this week that were up almost 1%. That is too much milk for this time of the year, and so we're starting to rebuild those cheese stocks that got drawn down last year when farmers didn't have any money to produce. So we think that trend could continue into the spring before it bottoms out.
And we just have to kind of eat more cheese.
We have to eat a lot more cheese, which I think we'll try to do.
All right, we're going to talk $7 corn with Sean Hackett in Market Plus in just a moment. Thank you, Sean.
Thank you so much, Paul.
That will do it for this edition of Market to Market. But as I mentioned, we will keep that conversation, talk to Sean about Market Plus, and he'll answer more of your questions. You can find it on our website at markettomarket.org. That's where we post a whole lot of things. Also links to our Twitter, and that allows us to stay in the loop with just a few characters. The Twitter bird is, that is. We share news, pictures, and behind-the-scenes information on our feed of @MarketToMarket. Join us again next week when we'll explore how a diverse set of Western stakeholders are seeking common ground on public lands. So until then, thanks for watching and have a great week.
Market to Market is a production of Iowa PBS, which is solely responsible for its content. Pioneer Hybrid International is a proud sponsor of Market to Market.
Sukkot Manufacturing Company, providing equipment and buildings to store and condition grain to help farmers adjust to market swings. We build drying, moving, and storage equipment designed to preserve the quality of their crops. Sukkot Manufacturing, store now, profit later.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.